Lastly, switching over to the aluminum side of things, this chart looks fairly similar to the nickel chart, which is markets are very well supported. We're in a very, very strong uptrend. I touched on the slide that was correlating aluminum prices to crude oil. It's not a perfect correlation, but it's certainly, and it echoes this idea of rising energy prices for a product like aluminum that's very energy intensive. They tend to be positively correlated with one another. So as we're seeing crude oil above $90 a barrel, you've got natural gas in Europe at $27 per MMBTU. Those things are going to have additive effects to the cost structure of aluminum. So I do think that there's a little bit of a geopolitical risk priced into the aluminum market as well, where I think a lot of people are having flashbacks to 2017, 2018, when the U.S. issued sanctions on Rusal and the price of aluminum just went absolutely crazy. I think some of that risk is still priced in. So until or unless we get the tensions between Russia, Ukraine under control, you probably continue to see that premium built into the pricing. If the tensions dissipate a little bit, I would tend to think that energy prices probably give up a couple bucks, and you probably see a little bit of deflation within the price of aluminum as well. And similarly, similar to what we did on the nickel side, this is looking at the exchange inventories of aluminum ingot. And you can see we're certainly at 5-year lows. If we extended this back, it probably take us back about 6 to 8 years since we were down at these levels. And for those who can't see it, it's about 782,000 units of ingot or metric tons of ingot. So things are certainly lean, and markets are tight on the base metals world with regards to aluminum and nickel for sure. And then lastly, on the investment management community. So again, this is looking at a similar chart of saying how bullish or bearish is the investment community. Very similar story to what we saw in nickel, which was that there was ample bearishness going into the lockdowns and all of that. And then there's very much so a very bullish trend. And that bullish trend has not only really maintained, but it's even ramped up a little bit. And maybe you could attribute this little bolt higher to probably a little bit to the energy move and probably a little bit to the geopolitical tension with Russia, Rusal, those types of risks. So again, there's a lot to watch, and it is all interconnected. But I really do think 2022 is going to be the year where we start to revert back to people getting back into their jobs in a fairly normal way, helping to loosen up some of these supply chains, but really getting back to the core of making things and producing things with fundamental building blocks of our global economy, which is for now fossil fuels, base metals, ferrous metals, things we've got to take out of the ground. And I know that may not be a popular opinion. I don't think this narrative of snapping our fingers and going into a wind-based, solar-based world is as easy as that. I think it's going to take a little more time, and I think over the long run, I think this should be good news for the manufacturing sector, experiencing some growth in 2022.